Hey guys, and welcome to the Working Money channel. JVXRP here on Twitter. 22 seconds of why JP Morgan hates Ripple and XRP, why they sent Gary and this lawsuit, and why they tried to escalate the adoption of Ethereum to run the JPM coin. 22 seconds, guys. This was Brad Garlinghouse from a Squawk Box interview from a few years ago now, and I think it's quite apparent when you're listening to Brad talk about Ripple and XRP and the superiority of that blockchain. Just listen.
For pushing, and also a lot of money attached to those settlements.
For sure. So we have over 100 banks working with Ripple today around the world. I think the vast majority of banks, like 99.9% of banks, actually are paying other banks, the kind of the global money center banks like JP Morgan or Citibank, to make those settlements. So a lot of the banks are very excited about democratizing how these global payments flow.
Aha! The democratization of payments. Perhaps this is why JP Morgan was scrambling to find another option to compete with Ripple, and maybe this is why they were pouring money into Ethereum. Maybe this was even why they were denouncing cryptocurrency in 2017, or rather denouncing Bitcoin, Jamie Dimon was at least, to dissuade from the fact that they were doing this under the radar, and they were also doing this with the help of the SEC. But going back to Brad Garlinghouse really does hit the nail on the head. The banks, 99.9% of them, have to rely on bigger banks in order to facilitate cross-border transactions. This is something I touched on in videos that I did several years ago. The fact that RippleNet exists now, the smaller players, they can transfer value at a low cost, at high speeds, and now they do not have to rely on the JP Morgans of the world. And so JP Morgan probably said, well, wait a minute, that's going to be loss of revenue for us. We have to move on this, and so let's work with Ethereum and maybe we can build something similar. Well, joke's on them. RippleNet, a superior product, and JP Morgan, to their credit, they have gone on the record and have said that Ripple is a good, viable solution for cross-border payments. But it is interesting to see the inner workings. Of course, a loss of revenue. JP Morgan likely didn't think that was a good idea, so they did have to look for other ways to compete with RippleNet and the product that they're offering. Anyway, great clip here, just putting things into context for us. Thanks so much, JVXRP, for posting that. I also saw this, guys, from XRP Crypto Wolf. Senior Democrat Ron Wyden claims U.S. should not crack down on cryptocurrencies. Cryptocurrency is not a bipartisan issue, and Ron Wyden, one of the most influential Democrats in the U.S. Congress, is going to protect the crypto segment from another witch hunt. According to a statement shared by Financial Times, Senator Wyden has warned Congress about the dangers of anti-crypto regulation. And so here's a tweet by Wu Block, one of the Senate's most powerful Democrats, has warned his colleagues against cracking down too hard on the booming cryptocurrency industry, likening it to the internet in its infancy. I want to be on the side of the innovator, said Wyman. Being the architect of its first internet regulatory designs in the US, Mr. Wyden compares cryptocurrencies to the early stage internet when protecting it against crackdowns. There is obviously a debate about stricter regulation, but I want to be on the side of the innovator. When I think about crypto, I think about remittances or somebody who has a kid 1,000 miles away and wants to get them help in an emergency rather than going through scores of banks, credit card companies, etc. I keep looking for innovations. That's where my heart lies. Senator Wyden's speech comes amidst another round of discussions about cracking down on unregulated trading platforms like Coinbase. And guys, I mentioned it in this morning's video. If you guys didn't catch this morning's video, I will link it up here in the top right-hand corner. I talked a little bit about how Biden will be signing that executive order on cryptocurrencies, outlining the administration's view of digital assets and directing further study of economic, regulatory, and national security issues. So there's that looming. And I think a lot of Americans are waiting, well, cryptocurrency investors in the U.S. waiting with bated breath to see what that includes. But here we have Senator Wyman on the side of innovation, on the side of innovators, realizes how this could go the wrong way. But, you know, if you support innovation like he did in the early days of the internet, they could get it right. And hopefully that will help produce more innovation in the cryptocurrency industry in the United States specifically, especially now when there are so many global bodies, so many other countries producing their new innovative cryptocurrency solutions. So the US clearly still wants to be at the forefront of innovation and technology, and stifling cryptocurrency would definitely be a step back. So at least we got Senior Democrat Ron Wyden on our side. Interesting news there. Wanted to thank XRP Crypto Wolf for pointing that out. Guys, I also saw this and I thought this was interesting. This doesn't have to do with crypto directly, but I wanted to extrapolate from this thread and give you guys some insight on where Steph Smith is going with this, okay? So think about this for a second. In 1994, Jeff Bezos famously spotted a statistic that made him leave his high-paying PE job to start Amazon. And that statistic was this: the internet was growing 2,300% per year. Now she goes on and gives us some more generation-defining stats. What are today's generation-defining stats? I'll post a few to kick things off. Now keep that in mind. Jeff Bezos made a decision based on a statistic, and look where that led him. The cost of mapping a genome has fallen 100,000% over the last 15 years. If that doesn't speak to you, we're talking about $100 million down to less than $1,000 faster than Moore's Law. How about college tuition? That has outpaced how much people earn by almost 10x. I'll let that one speak for itself. Now, these are all statistics over decades, in some cases decades or years, where we have seen industries boom based on the statistics that preceded them. Cyber insurance loss ratios have increased for years, despite exponential growing rates. Loss ratio equals cost plus claim payments and premiums. In other words, cybersecurity is becoming an exponential issue. Maybe that is perhaps a new sector that entrepreneurs should be paying attention to more closely. The percentage of men under 30 not having sex has tripled in the last decade. So these are all just kind of fun facts. I'm not sure what percentage of those men are now having sex in the metaverse. So think about this, guys. These are all statistics that exist. And of course, with statistics come industries where entrepreneurs can fill the void. In these cases, these are businesses. The metaverse, I'm sure many men under 30 will have their fun in the metaverse. Okay, I don't think I'll leave that there. Steph Smith also goes on to say the New York Times estimates that there will be a shortage of 300,000 semiconductor workers by 2025. Most emerging tech depends on semiconductors. Whether we're talking EVs, AI, gaming, and making chips is highly complex, taking up to 1,500 individual steps and up to 6 months. So, when we look at the statistics, when we look at where there is a need, where there is a niche, you can see where industries thrive, and you can see where some industries will emerge and thrive, and where big money will ultimately flow to next. There are a lot more here, guys. I will link this tweet in the description. The point is not the statistics that she brings up. The bigger point here is the Jeff Bezos point, the fact that he quit a high-paying job to start Amazon, and we've all famously seen that Jeff Bezos in his garage picture from 1994, I believe it was, starting up Amazon. Now look at how big that company is today. All because he spotted this statistic that made him leave his job. The internet was growing by 2,300% per year. Well, guys, we are in cryptocurrency, and I just wanted to bring you guys some statistics to remind you that we are on the right side of this. Cryptocurrency trade volume in the billions, and so this is just outlining from 2017 all throughout. And of course, we see ebbs and flows based on market activity, excitement. But take a look at this. Retail traders, professional traders, and institutional traders, and institutions are making up way more of that percentage in 2021. We only have the statistics from 2021. There's also this: global crypto owners reached 295 million. So this is just going through the year of 2021, but even just in this short period of time, look at where it went from January, 106 million, to December, 295 million, almost doubled in the year 2021 alone. And even if we break things down for 2022, what categories of projects do you want to see most on CoinList in 2022? In 2017, this may have been a very different list, but now we're seeing more interest in various different sectors. So breaking down cryptocurrency, DLT, blockchain technology into subsectors, gaming, DeFi, NFTs being the top 3. Finally, when we look at this, worldwide spending on blockchain solutions, the year 2016 to 2022 by region. And the region isn't really that important, but even just from 2016 to 2022, look at that exponential growth for blockchain solutions. Of course, the United States and Western Europe making up the lion's share of this growth, but even for other countries, we can see proportionately they are expanding. 2021 was a big year, and already in 2022, we haven't even finished the first quarter of 2022 yet, but we are seeing growth in cryptocurrency blockchain solutions by leaps and bounds. Again, guys, bringing me back to this point, we have spotted the statistics, we know what we hold, now we're just being patient before this industry explodes. And something else to be paying attention to, this from BondCrypt XRP, this is an article from coincora.com. Grayscale's crypto fund attracts capital despite underperformance. So even though Grayscale did not see the type of performance for their crypto sector that I suppose they wish they had seen, More money is flowing in. Capital continues to pour into flagship Grayscale Trust as its chances to receive approval to become an exchange-traded fund later this year look promising. The trust has attracted investments globally as the world faces consecutive shocks in the past few months. One of these shocks include the dramatic sell-off in technology stocks, which was then followed by the Russia-Ukraine situation. This resulted in double-digit losses. Funds such as ARK Next Generation ETF and the Morgan Stanley Insight Fund both experienced negative year-over-year performances because they had high exposure to the Grayscale Bitcoin Trust. But note this, nevertheless, neither of the funds reported selling significant shares of GBTC. Many factors played a role in GBTC's underperformance. However, just down here, institutional investors return to accumulate shares in the Grayscale Bitcoin Trust, or GBTC, as the discount to spot price has increased by nearly 30% according to data from Glassnode. So, essentially stating, despite the underperformance, investors are still very, very bullish on Bitcoin specifically, which to me, guys, just translates to the rest of the cryptocurrency market. Bitcoin, as I discuss basically every single day in some way, shape, or form, is not looking like it is going to stop anytime soon. We aren't seeing too much volume right now, but guys, this is looking like the mid-cycle point for the next leg up, a reaccumulation. This top here looks nothing like what we've seen in the past former Bitcoin bull runs. We've seen spikes in the past before a long downturn. But today we are seeing a different pattern. And I think, institutional money is also saying it loud and clear. They're investing more in Grayscale's Bitcoin Trust, in this example specifically. A few weeks ago, I also reported on the fact that XRP whales are accumulating XRP at an unprecedented pace, something we have not seen for 5 full years. And what about CoinMarketCap? Now, here's an interesting observation from Sen Hubert. CoinMarketCap completely revised the description of XRP this year. What stands out? CMC acts like there's a lawsuit about early marketing. Strange. They suddenly compare XRP with Ethereum, also kind of weird. They highlight Ripple's products. They say no other protocol than XRP could replace SWIFT. So, an interesting array of observations that they have tweaked on their website. This lawsuit has still not been resolved, so just with regards to the lawsuit as of early 2022. Moreover, the company has been accused of misleading advertising in the early stages of its existence. Ripple proposes a cheaper, more efficient alternative to SWIFT. They're doing this via the Internet of Value, which is the umbrella term for several Ripple products, namely RippleNet, the XRP Ledger, the XRP Coin, and RippleX. In contrast to Ethereum down here, the XRP Ledger does not use proof-of-work consensus mechanism. So all these various different changes to their website. And then just down here, which to this day has not been adequately solved by other protocols, Ripple can become a legitimate alternative to the SWIFT system with its increased speed and efficiency. And if we go back to the Wayback Machine, you can see that all that data has been changed. And this research done courtesy, again, of Sen Hubert. Thanks so much for bringing this to our attention. But I mean, what does this mean? Well, not as popular as other blockchains, it can be used as a settlement layer. LOL, the XRPL is the most widely used blockchain DLT for settlement after XLM by daily transactions. Anderzel even wondering, what the heck is going on here? Why is CoinMarketCap changing, revising the statistics for XRP on their website? The recent revisions are interesting given their previous carelessness with market cap pricing, etc. You have to ask why the sudden 180-degree shift with regards to attention to detail. As always, just follow the money. Binance is setting the stage for the relisting, and if you guys do not know, CoinMarketCap is owned by Binance, and so maybe, just maybe, this strategic change has something to do with what could be coming down the pipe. We do know many US exchanges are likely planning to relist XRP as soon as we get that verdict. They likely have it on pretty good authority when that's going to happen, likely better than we do. So is this shift that we're seeing happen before our eyes, does it have to do with the changing nature of the optics of cryptocurrency? Are we seeing more XRP whales accumulate because they know we are at the precipice of something very big? They are looking at the statistics and realizing, hey, this is a pretty sure bet. Biden's executive order is also going to play a big part in this. In the meantime, guys, we just need to hodl strong and carry on. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.